Bank Governor Lesetja Kganyago will later today announce the Monetary Policy Committee's latest interest rate. Business reporter Ntokozo Khumalo will be there and joins us now from Midrand. Ntokozo, you're at an industrial park in Midrand. What direction do the businesses operating there hope the MPC takes us out in? I mean, I'm thinking it's the obvious one. Let's keep the rate cutting cycle or the rate holding cycle steady, and so that we can have a little bit of relief as consumers.
Absolutely, especially considering, Iman, where we do come from when it comes to the Reserve Bank and interest rates, coming from a very hawkish position before we did start enjoying those interest rates. And, you know, the businesses that I often engage with often crying out that when we do see cuts, prices that go into their products, so the price of raw material that goes into their products don't seem to come down once we see those cuts. So it's an obvious choice, obviously, that they would want to continue to see interest rates go lower. But I am here with the CEO of Yivani, which is a beauty and hair and skin products manufacturer, and the owner is Ntshantsha Tafeni-Majombozi. Thank you so much for talking to us. If you can just talk us through your business quickly, the kind of business that you do, and how interest rates actually impact your business.
Okay, hi. We manufacture natural skincare products. So we use South African indigenous herbs and oils. And the company is Yivani. We've been around since 2011. You know, in terms of interest rate cuts, when they go up, it affects us on everything, you know, starting from shipping and freight costs and raw material pricing, you name it. I mean, even the staff, you know, because then if somebody takes a taxi to come to work every day, once then there's a hike, then the price and the fare doubles. And so you need to consider that as well. But when the interest rates now go down, we are always looking to see where we then benefit. And I know for sure that, you know, if the price of an oil that I've been buying has gone up, it stays up. However, you know, we can then benefit in other things. You know, as I was talking to you earlier and saying that we import some of the stuff, and even the ones that we buy in South Africa, we buy, but the people that we buy from, they import as well. So obviously then, you know, the interest rate, whether it goes up or it goes down, it affects us. But you then see a difference in those prices, because if they had gone up, and then when you go and buy again the following month, or the third month, or the fifth month, then you see a difference. But in terms of personal as well, you know, if I go to a Pick and Pay store or any other wholesaler and the loaf of bread has gone up, it doesn't go down. But what made us to survive is we have to, you know, to be resilient. When I say resilient, you need to adapt. As a business, you need to adapt. And also, you know, always are planning ahead and saying, what if this happens? What if this happens? And then you change your manufacturing practices, you change, you know, your costing structure, you change a lot of things in the business so that then when this happens, you're not caught off guard. So, for instance, now, we never ever produce without an order. We only produce per order. So it could be quiet for a day or two, but then we start manufacturing again because we want to put those costs down. And also we want to cost at a rate that is happening during that day or during that period. So that helps us as well in order to maintain the costs down and buying the raw materials. You know, we buy the raw materials at that cost during that period. So that's what has helped us and kept us going. And we need to. The products that we do is finished product, and it's Yivani and it's premium products. So we see in the finished products immediately, once then there's an up, we see people holding off, and we see sales go down. But what we then did as well was to then have an income stream of contract manufacturing, where we manufacture for other people, so that then, if then things are down at Ivani, and then we have customers that are coming, we're still manufacturing, we still are opening our doors, we still are using our capacity as well. But what is nice about contract manufacturing is that once then the product leaves my door, then I don't have to spend anything. Then the person that has bought, then they'll take care of marketing and sales and storage and all of that. And that is growing because people are cutting costs. They're like, I don't want to own the whole value chain. If I have somebody who can manufacture for me, then let me rather ask that person to manufacture. And also it's cost saving for them as well, because I can manufacture in bulk here. I have machines, I have, a lot of capacity to do for other people, and also at a cheaper rate than when they would be doing themselves.
Yeah, so I suppose it's businesses then working together to see where those costs can be cut. And when we did speak earlier, you did say you're not really watching whether the interest rates goes up or down, and it is about that planning. You've even planned around the geopolitical risks that are currently playing out.
Yes, we've done that. And what is nice about us is that we are not reliant on exports only. We have built the local market. So whatever then happens outside of South Africa, as much as it's going to affect us, obviously, but at least we have a base at home where we know that, we have people that are still going to buy our products. We are able to still distribute our products. And we have a few clients that are importing our products. And immediately when something happens out there, you see them holding on. If they're buying every month, you see that they're buying, after every month. Exactly. But then if we have a strong base at home, then that doesn't affect us much. But, things like then if we have to buy a machine or equipment, we buy most of them locally, manufactured locally, but sometimes you buy from people that don't manufacture, they import. And when you buy a machine, or when you plan to buy a machine, you get a quote this month, you'll buy it 6 months down the line. By the time you buy that machine and you're able to pay for it, stuff has changed.
Yeah.
So we need to then prepare for that, and that you've got that cushion, you've got that fat that you keep for stuff like that.
Jaja, thank you so much for talking to us. Jaja, of course, the CEO here of Ivani, and the keyword, Iman, is preparation, understanding how, that VAT increase, the inflation, and then interest rates affect your business, and to prepare around all those headwinds to be able to continue going on. Ntshantsha was also telling us that when the finished products don't move because of the pressure that consumers have moving, then that's raw material that other manufacturers can also use for various products, and just diversifying your products to work along the economic cycle that you find yourself in. We are soon to be heading out to the Reserve Bank that will then be delivering or announcing that decision by the Monetary Policy Committee in about 2.5 hours or so, Iman.
Let's hope it is good news, Ntokozo. Thank you very much. And we'll carry that announcement live. It really is important, particularly at this juncture.